Jayesh, thanks very much for your time. Good morning.
Good morning.
What's your reading of the entire situation? You were looking at the market before we hit air and you said the market is running scared. I just want to start with that. Running scared of what? What's really going on, you think?
No, I think it's this unknown, right? So, yes, people are worried about China because China's people don't know much about China. So, as one of your guests said earlier, right? It's not necessarily it's all that negative. There could be some positive, but basically people don't know. I think apart from that, what's also happening is the world volatility is very high, and especially when the markets are in a bad shape. Everybody, irrespective of their view, nobody wants to touch the falling knife, right? So till it stabilizes, we will see this kind of situation, which in a way is good because whatever thing has to happen happens very quickly. So I think the new phenomena in last 5 years which we have seen is whatever news, whatever positives or negatives, and more so negatives, get corrected very quickly.
Do you think there is also a fear that global liquidity will not come back now? So that we've seen the end of it, this entire global central bank saving markets.
I think it's both together. I would say rather one is the liquidity factor. That is somewhat impacting, but more than pure liquidity factor, it's also about the future growth and future revival. And that's I would say is weighing more than the pure liquidity. Because if you look at in the earlier times also when the US rates were much higher, if there was growth, if people see growth in emerging market, people would go in a big bang way, irrespective of what the US rates were. So I think to that extent, it's more weighing down on the growth. People are not sure about the growth. And that's...
But Jayesh, we've not been sure about the growth for the last couple of years now, right? But still, stock markets have done well. Because of liquidity, global central banks doing easing and stuff like that. Now that is turning, and maybe
there was always a hopeful trade, right? And now, particularly, one of the largest thing in the emerging market is China. And why only emerging market? Globally, China impacts a lot. So, and people are not sure what's happening there, and that's impacting. And like with China, all emerging markets do get impacted. So hopefully at some point of time, we don't know what happens to China, but at some point of time, maybe China and India get de-link, and that's when we will see stability coming in.
So that is the hope, but do you think there's any chance that will happen?
I think the de-link will happen at some point of time because...
and we're talking about capital flows, right?
Yeah. So a de-link will happen, but the way I think a lot of the FPI funds are structured, it's very few India-dedicated fund. It's
mostly emerging market funds.
Yeah, it's emerging market funds, and India gets an allocation. So if that gets impacted, definitely India also gets impacted, irrespective of what India's story is about.
The assumption one makes when we're talking about India in the context of globe is, everyone, generally the tone is, the problem is outside. India is okay. Standalone, there is no problem here. Do you believe that, Jayesh? I'm not talking about the macro fundamentals of stability. I'm talking about growth here, prospects of growth.
No, I think there is definitely Indian demand. That's for sure. But we cannot escape the global slowdown, and that actually I would say would be good for India while we are going for all the make in India and selling in India and demand in India. Commodities pricing being low is definitely, we are one of the few emerging market which really helps commodity prices being low. And I think that's the time and to get the things getting on and get the positive out of it.
From the on the corporate sector side, is anything moving? Loans, demand for loans?
Generally, that's what we keep on hearing. Most of the loans which are coming through are mostly refinance of the previous project. I don't think capex new loans are coming through. Some working capital loans, there is some offshoot. I think the last quarter of 2015, did show some of the working capital loans, particularly on the MSME sides and stuff like that. And maybe that's what we are not still sure, but it's all reflecting about the priming which is happening, particularly on the roadside and stuff like that. So that's good. Hopefully, railways is the next thing to look out for. But of course, these are all large projects, does not get immediately spent on, right? So it takes time.
I mean, we've not seen a large core sector project coming on stream for the last year now, right? Nothing.
That's true.
The October to December CMI data shows that new project proposals are down 74%, adjusted down 60%. These are just proposals to set up new factory, expand capacity or whatever. So it's pretty dire, I mean, if you look at those numbers.
Yeah, but that always goes with the global demand, global sentiment, right? So also local factor. But I think that to expect that immediately is the new capex would be really more wishful thinking. But at this juncture, doesn't look like. And even what we have, that can get efficient, right? So even capex can be added on once you reach excess capacity. So
right. No, I agree with all of that. But and you were also agreeing with this. But then how does this gel with this entire say for example, Make in India or optimism on capex reviving? That's the point I'm making. I'm just citing data. I'm not making it. I'm not making a new point.
That will have to come from government spending. So government spending will, because as of right now the risk appetite for private sector is quite subdued, and if that will revive once the government spending sees the offshoots. So as I said, last quarter was some offshoots on the MSME side, and maybe once we have the large capex, large stuff coming up from say railways and other stuff, which government is planning to spend heavily on. But all that really takes time, right? So that's where the challenge is.
Just a quick word on the rupee before we wrap up. Where do you see that heading in the near term?
Near term, purely range bound. I think global risk off situation is not letting rupee appreciate, whereas our seasonal factor, particularly Jan, Feb, March seasonal factor, is not even letting it depreciate dramatically. So to that extent, unless we see a very big move coming again from China, I would say it was more or less stable, more or less range bound at this juncture.
Would you? I don't know if you have that kind of data, but is borrowing borrowing out of China yuan underlying large for Indian corporates?
No,
one was hearing that it was picking up last year.
But I don't really have the data, but purely from all the media reports, doesn't look like a large number.
Would have been a good strategy, right? I mean, last year to do that. Thanks very much, Jayesh. Appreciate you coming in with that perspective, and good getting that. Thank you.